Good morning, good afternoon, and good evening. Doc here from North America. It's just another fun-filled summer day. That's what it comes down to. Let's see what we got going on this morning. We have, you can see right off on J4X right there, you see the Swiss moving down, 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 down. And what does that mean? It means the dollar is going down, 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 down. That's what that's all about right there. Let's just take a quick look. Let's see, which way do we go? Is it right there? 4x? Nope, that's not it. We got to switch one over. There it is. And when we come and look at, that's the, what is that? That is the dollar index. It's going up. Okay, that's cute. And let's take a look at the Swiss on there. Yeah, look at that. Down, 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 down. So is that a flight to safety? I say yes. That's what we see here now. It's more of a flight to safety because not all the pairs trades are acting as strong as the euro. So that is somewhat of an issue. And without a doubt, some of the, I mean, I don't know if anybody knows who Grants is. Grant, Grants, Grant's newsletter. It's a interest rate newsletter. It's been out for decades, 5 decades he's been writing, something like that. And the headline yesterday was something absurd. I mean, it's just pure fantasy land. I should try to post it on here. It was he was quoting the 10-year, which I think fell down to like 111 or 110 in the United States. He was talking about the 30-year Boon, which was yielding minus 1.3, and then he was talking about the Ecuadorian. I think it was a 30-year, which gave they just defaulted on $17 billion last year of them, but this year it's yielding 28%. And he had nothing really commentarily to say about any of them. In other words, he's given up finally. I mean, for the longest time he's been just rambling about, what, and, this is wrong, that's wrong, this and that is wrong, everything is wrong, He's at a point now where he's just given up. And Grant, without a doubt, has been one of the more disciplined, let's say, middle of the road prognosticators. I think that's a good word I like to use. In other words, someone who talks about the markets. I'm a prognosticator, and you discuss and you suggest what you see, and then you try to interpret it. It's a newsletter. It's an electronic newsletter of the 21st century, and without a doubt, that's I was like, wow. Matter of fact, let's see if I can find it. Yeah, maybe that's it right there. Let's see if I think I can find what I sent, which kind of blew my mind in many ways. There it is right there. There it is. And let's see if we can grab a hold of that and bring it up on something. Maybe just paste it. I think that, can I paste that on there? Maybe I can. If I go like that and then put it like right there. Let's see, paste. This was my response. Is that it? No, okay, so 10-year was yielding 1.15. I saw it down at 111 at one point. And the German Bund was yielding a minus 1.2 on a 30-year. And then it was a CAA3 single B minus rated Ecuador, which had defaulted last year on 17 billion. Stands as the best sovereign performer of 2021 with a 28% average return on the bond this year. So I said, geez, Grant's Interest Rate Observer, that's the name of his newsletter, needs a name change or a new headline, Fantasy Finance. And that's pretty much where it came down to in my head. It's just the reality is, you can't make this stuff up anymore. This stuff is so crazy. It's crazy. It just is crazy. Let's remove that. It just is what it is anymore. It's just wild and woolly, and I guess it's like looking at cattle, trading at about $1.40 a pound, or it's just everything. Wheat at 7 and change. I mean, it's just there's just wild everywhere. And then you come back to this nice angelic little universe, the Forex. The Forex is like safe haven. You want some sanity, trade Forex. Because honestly, Forex is like the least of the crazies. I guess you could say, except for when you try to put interest rates, to put fundamentals to it. That's the problem, is that the fundamentals now don't match even over in the Forex. But everything else is okay, so it's not too bad. It's not too bad. Like the dollar. How can the dollar be firm? Now, let's take a look at it against the euro, whereas you see on the Swiss, it's just, Swiss is become a safe haven. The euro is kind of flat, the last 3 days. It's just locked in that little range. And then you go back to the Swiss, and you see the last 3 days, it's another new low. We're going after that magical 90 that we've looked at off and on for the last couple of years, why these two channel lines sit on this chart for the last couple of years. We watched the way it just plays around that channel line, and we watched how it worked its way down to that channel line back in back in April of no, it's that right there is July of 2020. So a year ago, this product found a way to park itself in that channel that we'd been watching for a long time. And when we go back on Dukascopy, go back even further, you can see the channel's been something that's been thought about, watched about, so forth and so on. But there you are, and then you go and look at the cable, the British pound against the dollar, and it's been almost non-existent also, like the euro, in the sense that now it's popping up a little bit. Slid into the daily sell the last 2 days right here. Let's put that in there. With a weekly buy going on. I guess we should do it lower, since it's an official in the sell right there. And who knows how fast it'll take to get it back into the buy. Maybe a day or two. 3 or 4 days sometimes seems to occur. That seems to be the length of a position. And the next thing you know is that it's starting to lift again. And so we're in the weekly buy, and it seems to have no issue about that at the moment. The strength is still there, and it's not curving. So you really scratch your head and go, okay, let's see now, what's the fundamentals say about all this? And they don't. I mean, the fundamentals are off the rails. Right now we're talking about demonstrative inflation, and no one seems to care. We watched the 10-year bond get as low as 111 yesterday, 110 and change. Actually, I saw it quoted, and it ended up at 115. It's like, wow, is there inflation? Is there not inflation? Does not inflation mean something? We're seeing all the prices around here jump up, from cattle to wheat to lumber. Lumber's actually backed off, which is very fascinating. It's lost over 60% of it from its high. 60, yeah, it's dropped that much. So something had to back off. I guess that was some type of supply chain issues, whereas a lot of this other stuff is not supply chain. Let's see, what else could we use as an example? We do see our food prices going up in the stores slow and steadily, but we have so much food, it's not that bad. Our supply chain is pretty successful at that, so not many people are screaming. We see crude. We can drift over to crude for a second. We see crude oil. See, that is a stock combo. So right there, okay, there it is. I'll put it down there. And we see crude making its dip again. Its dippy dip. So you go like that. There's the crude. And yesterday it went into the sell. And you can see the weekly has rolled over right there. And you can see crude over here on J4X. Right there, following in pursuit the same exact way. Moving down, it's like $5 off its highs now in just a matter of days. Is that could be about right? What was that? 3 days ago, it was trading in the 74 area, and the high was right there. And in many ways, you've got your A, B, C thing going on. There's the A. Let's use a little drawing line here. There's your A. And then you get your B with a lower high, which is even more Elliott. And then you've got your C now. We're going to see oil back down to this area. Oh, what is that? That is the, let's see, what is that? That is the 60, what is that? That's, yeah. That's got to be somewhere around there. We're going to get a crosshair that will tell us what the value is. Where is the crosshair? I don't even see the crosshair. Huh. Alright, well, let's just put a line in there to try to get a flavor of the price range. But right there, we're looking at 65. You know, 60, right around the 65 area. So we got $4 more on the way down, maybe? Possibly so. Possibly so. And I guess, you know, a slowing world economy, you know, poor U.S. government decision making at the moment. You know, I mean, Biden is. They say the way they look at Biden, most of these people in the States here now look at him as a committee, like as if it's not Mr. Biden itself, it's just a committee making all these decisions. You have like 3 or 4 different voices in the news constantly making their statements, and if they don't get what they want, they claim that they will, just like AOC from New York. You know, she says one thing, they say another. You know, the senator from Arizona and the senator from West Virginia and the senator from, I think it's Montana. You know, they have to toe the line on a more conservative basis or they'll lose votes. You know, there's Americans out there who believe that we're in some type of little smiley face type of universe where it's okay as long as everybody gets along. So that is where we're at the moment. And then we go back to the currencies and we just shake our heads. It's like, how come the dollar is where it's at? Why is it not getting sold hard down? That's the bigger question. All right, well, let's go over to real fantasy land. Let's check out Turkish lira. Look at that. It's doing its thing with that sell signal and the weekly sell signal. And that's a nice interesting bottom they've put in there. Maybe that's maybe we're going to get ourselves a little bounce again out of there like that. Every time it gets down low like that, you see that move up. There's one right there. So I mean, we get a green dot and a daily buy. Expect very short-term strength to start kicking out on the upside. Then we zip-diddy-doo-dah over to the Euro Turkish lira. And let's scrunch that up and get a flavor of it too. Now that one has to really put some basing in. You can see here, at best that could do is generate it sideways. This one here took about a week and a half to start a move. This one here was part of a move. And that one was just a higher low. That's an interesting one, isn't it? Bouncing off of the 0 line. Very, very mild bounce, but it was a bounce. And now it's tried it again right here, and it went nowhere. And maybe they need to put in a nice big bottom before it really bottoms out. That's the way it looks to me. The way I'm trying to read the math, it kind of screams that to me. All right, and from there, since this thing is showing the weak, strength against the dollar, more than likely the Canadian should be showing strength against the dollar, and there it is. Canadian is not showing strength against the dollar. See what I mean? The level of reality anymore with fundamentals has just disappeared altogether. And you can see here, not only is it doing that, it's threatening to go into a daily buy with its weekly buy. Maybe they're going to go after a new high. Oh, joy. Maybe that had something to do with the girls' soccer team or the women's soccer team. I don't know. We'll see. And so we're watching this ABC here that maybe is going to start turning up, as this is the A, and then we'll get a B that takes you back up to the dotted lines right there. See what kind of action that is. All right. From there, we always do go and check out the metals and the crude. We just saw the crude. The crude is crude. It's trying to break down right there, as you can see. Is that it? That's not it. It's right there. And you're not even seeing what I was just doing. Okay, so there, so those currencies you didn't even see when I did the Turkish lira and so forth. Oh well. All right, we can go back to that. If someone asks for it, we shall show. But you can see there's the Canadian looking like it's trying to turn that way. And as the oil breaks down. All right. From there, we zip back over to the metals complex. Let's find that metals complex. And obviously, Mr. and Mrs. Gold. We showed yesterday how paper money and spot metals diverge. The divergence, like in the movie. You can see here we're in a daily buy for a second day with a volatility signal. And we are seeing this action here of a weekly signal trying to tell us something like, no, we want to buy this thing. No, we want to buy this thing. That's what the longer term money is trying to tell us at the moment. But this is only Monday and Tuesday. Let's see how it plays itself out over the next couple of days. And we're seeing it in platinum. Let's go over to platinum instead of silver for a moment. We saw that yesterday or Friday, one or the other, when we looked at the platinum. You can see the daily is been in a, well, actually it's been in a buy since where has it been in a buy since? Right here. Went into the buy there on a daily, and it has slid in the upwardly direction. Just like when it went into the buy here and it slid in the upwardly direction, or when it went into the buy there, it slid into a work. But you couldn't take it because why, traders? We're in weekly sells, so obviously it was winner, winner, chicken dinner there. Winner, winner, chicken dinner there. Winner, winner, chicken there. 3 wins right in a row. Good ones too. A 4th one right there. And this one starts to stall. Look at that. It puts you into the sell here. And the next day they give you a volatility signal. And the next day you can't take the buy, and that's the day that you can cover. So it goes zing, zing before it covers there. And now we're starting to see this flirtation with the weekly. So gold is doing it, platinum is doing it. Let's see what Mr. Silverado is doing. Silverado is a fascinating tool. It is in a daily buy from here, and at the same time it's still in a weekly sell from many moons back. Where's it at? There it is right there. From the 28-ish area, and it was back in May. We've been in the sell. So maybe they crack the whip and get it going. Let's see, what did it do? Let's see what it did. I think it's right up in here. It is, yeah, it closed in a weekly buy last week, GLD. That's what I think we were talking about this yesterday or a day or two back, where the ETFs are much more tradable. There it is right there. The ETFs are much more tradable than the, what's the word I'm looking for? The spot, So, tat-is what it is. I think Robin's looking for you. But yeah, that's it's obvious. The spot is not the place to be. It's the paper ETFs. They're the place to be. They trade better. Or they follow the rules better. Or, we have that, like the hand. In those stories, the hand. It keeps on. When it comes to the spot prices, it seems to interfere with it, makes it sloppy, makes it less accurate. I don't know. I mean, the weekly, obviously, the more stretched out you get, obviously the math becomes more coherent to it all. But the dailies, it's really hard to trade. Very hard to trade. I mean, our math does a good job at it, but it's still hard to trade. Whereas on the ETFs, you get much more instant gratification of, you just get more instant gratification from it all. Yeah, let's look at the SLV. Like right there. That is flirting with the weekly buy like the way gold is. And at the same time, it's in a daily buy, but has gone sideways down. Nothing bad, just mildly losing it. I mean, it went into the daily buy on a close of 72, and today's last trade is 57. You're only talking 15 cents. It's not the worst of things. But I really do think that these are the places to be more than the spot. Or follow them to follow the spot. That could literally be the answer to it all. All right. Oh, let's check and see JO just since we're there. Is that today? Yep. Look at that. So JO is trying to bounce back up. And tags, wow, tags is getting pulled in all kinds of directions, isn't it? That's yesterday on the tags. Let's see if we can get a control R that might help it a little. Nope, nothing yet. Let me see. So that's where we are with the Canadian and so forth. Now what we do is we go back to the currencies and we take a look at the South African Rand, just to see if they're matching up to the metal complex. Let's see, which button is it? It's that button right there. Yeah. Oh, there we go. Okay, good. And so you can see ZAR, where Zul. There it is right there, Zul. And you can see here, this thing has been going down as the metals try to lift. And hopefully the Zuma situation has ended. And that is the name of the game there. So we should see even more. And you can see it's in a daily sell. It is finding its way to slide. You can see the white line has broken the upper time manifold, so it's trying to also break down. So they're working their way down, 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 down as they go. Let me think. What else is there here? So we zip to the ruble, the rub. And you can see a little firmness here today, but it's been in the sell for days, and we are underneath the zero line on the weekly today. So they're putting the pressure on that. And rightfully so. It should be much more valuable, that currency. And then we drift over to Mr. and Mrs. Yen. Same situation, a daily sell, heading down, went into the weekly buy last week. Let's just remove that. There we are. And so that pressure is correctly emphasizing the direction. The yen is finding a way to go down, 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 down against the dollar. Now, let's see, what's the next one? Actually, it's gaining value. When it's going down in this case, it means that it's gaining value against the dollar. And then we drift over to the Mexican peso. Andale, andale. There we are. And that's taking, doing its low thing at the moment. Daily sell from there. Tried to lift, but could not. We got a weekly that's literally pinning itself along the zero line. We really want to see how that'll go. See if it'll unpin itself away from the zero line. Then, let me see, we go to, let's see, we did the ruble, we did the yen, we did the South African Rand, and we're doing the Mexican peso. I guess that's the four we do. That's what that is. All right. And from there, where do we go from there? We usually do, what do we do? We take a look at whatever anybody wants to see always. But from there, I guess we could drift into the stock indices and see what they're doing. Look at the Tech 100 that's on Dukascopy. It's trading up 29 points. Whereas the S&P 500, it's not good. Can't move it over. Yes, you can see that right there. The S&P 500 is up 9 points. And the Dow Jones Industrial Average is up 88 points. It's just done a slide here over the last, what is that? 25 minutes, 30 minutes. Last 30 minutes, it's taken a slammaroo. Did we have news come out? Maybe we had news come out. You know, it's that 8:30 time in the U.S. of A. So sometimes that is the beginning of some type of news that suggests maybe they should be long, maybe they should be short, maybe they should be doing nothing. Now this product has been this morning already. I think it touched the 35s, didn't it? See, what's the high today? The high is 34,897. So 897 is trading at 11 right now. 97. So it's 86 points lower. And I was saying to somebody this morning, one of the traders, I was saying, you know, it's the speed at which the markets will move nowadays is something, which reflects how thin they are. You know, in other words, the bids disappear and the offers come in when they're all selling, and vice versa. When they're buying, the bids come in and the offers disappear. And so you have to reach. They know that there's certain players out there that have to reach for the product. So they raise the offers and they sell them a little and they sell them a little more and they keep on raising the offer, making them pay up, hoping that they've made them step outside the band or channel, and then it collapses back down again and they cover their shorts. Being a market maker in the 21st century must be just, tough. Something many people don't talk about, market makers. They think brokerage houses are market makers. They're really not. They're trying to facilitate the execution. They're looking to their parent company, like in the case of Dukascopy, they look to Swiss Bank. If you're JP Morgan, you're Chase, you look to the trading desk of JP Morgan, so forth and so on. The days of the brokerage house being a market maker and a facilitator of execution have kind of waned. They've kind of gone away. And you can see here now. Look at the Nasdaq stock is up 34, and then what's curious to me is the grand poobah of the Nasdaq stock indice, right there. Apple Dapple. You can see Apple's putting some pressure. Oh, look at that. The line has jumped back. This morning when we sent this out, it was moving down. It was below the zero line. Now it's popped back up. And then you go and look at Amazon. Amazon's really flatlined down here where they gapped their down from that daily sell of here and the weekly sell of there. Or is that the weekly sell right there? And so either way, it's been pressured on the downside. Awful hard to make markets in products like that. But someone does, that's for sure. And then that is the Tech 100, and you wonder many times. You wonder why we don't see the markets calm down. And there's the VIX. VIX is the volatility index of the S&P 500. You can see it's trying to head up, and you can see the white line is even piercing the zero today. Look at that, 0.09. And look at plot 4, it's at 19, plus 19. Whee! All we need is the daily to get going, and maybe there's a sign of some volatility to be. I mean, real volatility. This is not volatility, this is just normal background noise. And that's one of the issues probably that always catches my eye more than anything else. All right, so is there any other currency we could take a look at that has something to do with the world markets? Nothing jumps out, What else should we look at, traders? Oh, I know where we were. We were looking at the stock indices. Look at them lifted. And even now you can see the Dow is trying to lift up too. After that nice slide that they did. Obviously whatever news came out at the same time had a reverse effect on the Tech 100. And the S&P 500, let's see, tighten that up just a tad. Try that again. Let's see, that is 7 and change. Let's see what that was. That was 655. So where's 655 here? Ah, okay, that's making some sense. Let's move that out so we can see it all. So there's the 655 also. Same situation. Whatever news came out, they drove it down. And then on the Tech 100, 655 was right there. It drove that down, but then they saw it as buying opportunity, and now they're going after the highs of the day. It is amazing. It really is amazing. To live to see this type of trading is phenomenal. To live to see that the New York Stock Exchange is a bowling alley now is phenomenal. And to see that the U.S. Federal Reserve is the buyer of last resort. It really, there's these stories of J.P. Morgan, J.P. Morgan, the real J.P. Morgan, and how he would, get together with other big investors and whenever the markets were collapsing because of whatever financial issues or cycles, how they would get together and they would play cards. He had an office right across the street from the old New York Stock Exchange, and they would they'd get together and play cards and sit there until the big investors would commit more capital to perk up the economy. And that's what really set off the socialists in America. Is back in 1912, 1913, when Woodrow Wilson was president. He said, "Oh, the heck with this stuff. We can't allow individuals to have that type of power. We need to have a federal government that has that power." Oh joy, bureaucrats. And sure enough, they created the Federal Reserve. And with it became probably the beginning of a downfall of the financial system. I guess the biggest, there was a movie called Kaiser Soze, and I think they said that the biggest success of all of the devil was the fact that he made people believe that the devil existed, but no one could pinpoint it. I forget how the philosophy or the wording came out, but in the end result is that the greatest shenanigans or the greatest fake out created by the Federal Reserve is to convince the rest of the world to become heavily invested to the point where they all went bankrupt in 2008. And that's why, hence, Merrill Lynch is now owned by Bank of America. And I bought it for, I don't know, $5 a share, $7 a share, something like that. And when it was a $200 stock and then the number one brokerage house in America for 100 years. Bear Stearns was given away for like the same price tag, $12 or something like that, to JP Morgan. Again, one of the most prestigious, what they would call boutique brokerage house, given away, and the real estate given for free to JPM, no less. And you can go on and on. Wachovia is owned by Wells Fargo now. Lloyd's of London is owned by the Exchequer in England. Bank of Scotland is owned by the Exchequer in England. HSBC is owned by the Exchequer in England. So forth and so on. Deutsche Bank is owned by the German Federal Financial System, their Federal Reserve. It goes on and on and on. And that happened all in 2008. Most people don't realize it anymore. Since the name still exists, but the actual ownership and the value of those companies are pretty much gone. So probably the only real thing you can say about trading is when you go into the Forex market, at least, the Deutsche Mark is, not the Deutsche Mark, the British pound is still being traded in Britain as the currency, or the dollar is being traded in the United States as its currency, or the euro is being traded out of Europe as its currency, or the yen is being traded out of Japan as its currency. But who really rules it in the end, I guess you could say, is the Federal Reserve. Controls all those currencies now. Hence the reason why the dollar is still king. I mean, how does the dollar stay in a daily buy and go actually up in value against most currencies except for some of the majors, like the Swiss. Swiss is probably considered one of the best safe havens now, and it just goes on and on and on. And that's the world we live in. It's a fascinating place, really, when you think about it. To live, to see the markets do these things and change like this is something that people don't see in a lifetime. 2 lifetimes, 3 lifetimes. It is something. All right, where did we leave off? Let's go take a look at the dailies of these things. I'm looking at just the intraday. So we go and we shift over to, let's get rid of that. And we go to right there. Let's put that up there. Here is the NASDAQ 100 right there. And you can see there it's trying to, it's in its daily buy from here. And what it's doing now is it has gone up in direction. And still marching up, and we're in a weekly buy down in here, so no sellers there. Then we go over to the S&P 500, and that is really funny in its own right too. It's been in a daily sell since here, and it's gone nowhere. And it's in a weekly buy, so it's in neutral position. Can't really get going on that. Then we drift over to the Dow Jones Industrial Average, the big grand poobah of stock indices. And that's the same way as the S&P in many ways, you know, sideways and down, and the daily self-since there. The weekly is trying to, let's fix that, there we are. The weekly is trying to break down. Not much, but is trying to break down. Trying, the key word there is trying. And then we go over and we take a look at the most speculative of the 4 indices here in the United States, and that is the Russell 2000 right there. And the Russell's flirting with a weekly buy. You can see that there. And it's been in a weekly sell since here. I'm not sure why the lines are not there. I think I was working on it yesterday. So that's where it went into the weekly sell. And you can see this is the all-time highs right here at the 23.5 area, 23.50. And you see it's fallen down to 21. Stuck in the middle of the range now at 22.18 as we speak live. And you can see the weekly is starting to get some legs in it. Matter of fact, I heard somebody yesterday say on one of the the news that I follow that if they can only get the Russell 2000 to go back up to all-time highs, they expect to see major more strength again in the stock indices. So this sideways churn that we're watching right now in the stock indices is not that far-fetched in the sense that there are some who actually observe it and realize that it's happening. Yes, that's right. There are some out there that actually know what's going on. Now, let's see, what else can we say about any of this? I guess that's about it. I don't really have much more to think. All right, and so there are the 4 major stock indices in the United States. And we can take a peek at, we have the, what is it, the yen future, the Nikkei is right there. Wow, you know, sloppy, and this week it is trying to climb into a buy right there. It's been in a sell since right here. No, I guess not. Went into a buy there. Fell back into a sell for a few more days, or weeks. And now it's flirting with a weekly buy. It's hard to believe that this product at one time was 39,000. I mean, the best we've seen this thing do is get up towards the 30,000 area. But back in the 1990s, it was in the 39,000 area. They were buying all that real estate around the planet. It was exciting times for Tokyo. And then things got kind of tangled up, I guess you could say. What a quiet day it is today. But yeah, you know, Nikkei was way up there. And I guess the FTSE in many ways, too, is kind of trapped. It doesn't really take out new all-time highs. It plays in the upper end of the range, of course, but it doesn't take out the all-time highs. Same thing with the DAX. I don't think the DAX is seeing all-time highs either. Let's see if we can find that. Where are you, DAX? Not there. Stock indices, maybe? Let's see if we have it in there. Not there. Let's look at the DAX on the J4X. Alright, not that, not that. There's the, okay, there you go. Well, we're getting a chart on it. We're not getting prices. It seems odd. Including data. Yes, where is the stock indice? How come we're just getting that? Let's make it bigger. Let's see if we bring this down. Again, where's the DAX? Is it a line chart on me? No, that's the stochastics that we follow. It must be around here somewhere. Let's see what the FTSE does when we do that. The FTSE doesn't do that either. How about that? Let's go back to a currency and see what they're doing on the currency. Maybe I need to push another button. Turkish lira. No, I must have done. Oh, there it is. Okay. So now, let's go and check out the DAX. Now. There we go. And maybe that's the all-time highs. Let's see if we go to a quarterly. Or at least let's go to a monthly. Get a better flavor of how high or low it has been. Whoa! So we are just with the all-time highs. That's pretty cool. Okay. Yeah, we're flirting with all-time highs all the time now there. Now let's check out the FTSE out of London. FTSE, where are you? Sprechen Sie. There's the FTSE. That's why I like the J4X. I can get the longer view sometimes. Okay, so what is that? That is a monthly. So the all-time highs are up in here. So the FTSE is not making a rush towards the all-time highs. You know, I mean, it's climbing towards it, but you can see here the V bottom of 2000 right there. It did its job like everybody else's. What other indices should we look at? I wonder if they have the Nikkei. Let's see. Maybe it'll show it. I don't know if it'll go back to 2000 or 1990, but let's see if we can find it on here. There's the Hang Seng, FTSE, soybeans, dollar index, Euro Stock 50. Let's see what that looks like. Now that looks like they're playing with all-time highs too. Maybe they just don't have as many tech companies anymore in the FTSE. Maybe that's part of the issue. And there's British Pound, Hong Kong. And that is the Nifty 50. Let's see how the Nifty's doing. Nifty has flirted off and on with all-time highs. Yeah, that's looking fine. Looking good. Feeling good, it says. Let's see, there is the Dow. There is the S&P 500. There's the Tech 100. That's where they stop, I guess. Let's see what the Bitcoin is doing. We are holding up. We've been in daily buys. We slid into the daily sell yesterday, I think it was 2 days ago, something like that. And you can see it's broken down in here. Nothing major. To me, it's going to orbit this area for a while, as far as I'm concerned. And that's a monthly. Let's go into a daily. There we go. Yeah, we went into a sell a couple days back. Or 1 day back, something like that. Ooh, Tay, nothing. Quiet on the... It's the summertime. Everybody's beaching it right now. Yes, indeed. I should have posted that sooner. Posted this. Yes, indeed. And that is where we're at with the stock indices, which is kind of fascinating in its own right. Don't really see much going on. Maybe the markets are staring at Amazon. You know, they seem to be a little sideways in here. Amazon might be telling them, you know, this is the direction at the moment. I don't know how anybody could have interpreted anything less than what, I mean, Amazon gained so much from the COVID-19 situation that it didn't surprise me that the numbers didn't match up to what some people were thinking. Matter of fact, there's a lot of people, or let's put it this way, a lot of people in the area that I watched from, know there's the news that I pay attention to, who's been kind of doubtful that anybody on Wall Street anymore is giving any really solid direction. So, alrighty, let's see, where do we go from here? Take that out, and let's minimize this. We've got the daily in there, so that's good. Now, what else can we take a look at? Let's just check to make sure no one's on the chat line. I'm missing something. Nothing at all. Quiet, quiet. All right. Since we don't have anybody asking any questions, we'll go on back to the rhythm. We were looking at the stock indices, so we finished those off. I got my opinion out about what the math is trying to say. So now what we'll do is we'll drift back over to the commodities. I guess that'd be the place to go. I guess we could take a look at like Zolty or something like that. There's a few currencies that might be worth looking at. Something we haven't looked at in a while, maybe. I mean, we look at the Canadian, but the New Zealand or the Aussie, don't look at that too much. No one seems to ask about that of late. It's gotten kind of quiet on that front. Maybe we should take a look at the Aussie. I always find that curious. Usually Aussie's a really big pairs trade here in the States because they can understand dollar. It's very primitive. Oh yeah, dollar, Canadian dollar, American dollar, Aussie dollar. That's about it. Say lira to them. Most of them will just think that you're talking about the Italian lira. And you can see there's the Aussie. And it's been flatlined again, going nowhere in a weekly sell, basically. It's been in a weekly sell for a while there. Let's see where that started from. Back there on that upper plateau, back in late May, in the 77 area, 77.5 area, something like that. And it's drifted down into the 73s, 72s. And the Aussie has not really looked back. It's just kind of hanging out there. Now, taking a look at something a little bit more exotic, the euro against the Aussie, right there. It's in a buy since here. And since that May situation, it has had an upwardly drift. You can see it went into the weekly buy here in April, no less. And then in the middle of June, it went into the sell. Lasted for just 2 whole weeks and back into that buy again. So it has the same characteristics. Inverse, of course, because it's a dollar Aussie, and whereas when we're looking at it, it's the Aussie against the dollar. See, like right there, Aussie against the dollar. What is that? That's a super one, right? Yeah. I follow this one. Right there. It has it in there too. Went into a buy and rolled over into the sell again. Interesting. In and out, in and out. And so that's the 2 ways of looking at the Aussie. One through the euro, one through the dollar. Both showing the same characteristics. The Federal Reserve knows how to make it all march pretty well together. And then, what else we got there? There's one. That's what the Scandi. Aussie yen. Check out the Aussie yen. That's kind of neat. That's been in a sell since early June. Right up in here, right before that collapsio. Let's fix that. Needs to be a solid line, like so. There we are. And that's been, went into the weekly sell there and just found its way to drive itself down. The Aussie against the yen. Well, that's kind of neat. So we've looked at Aussie against the dollar, Aussie against the euro, Aussie against the yen. Do we follow anything else? It's kind of neat, just diversifying by looking at the different ways that an Aussie is moving against. Aussie dollar, Aussie yen, and is it euro yen? I think it's a reverse of it. Euro yen. Where's it at? It's near the NZD. Yeah, right there. Okay, let's see. Oh, there's one I like to look at too. The euro against the Canadian, showing the same characteristics. It's trying to bounce up. It's been in a weekly buy for 3 weeks here. Right there. So this week it found a way to go into the buy, and it zipped from the low, I guess you could say the high 147s to the low 150s. Nice handle move there. Again, the Federal Reserve seems to control all these currencies at this point. It's kind of like, one of those automobile organizations like General Motors. General Motors sells, Cadillac and Pontiac and Oldsmobile and Chevy, and what else do they have in that pack of things? What was it? Saturn? Remember they had Saturn at one point? I think they sold it off to a European conglomerate. But they had like 5 different car companies. Oh, and GMC itself. There's a GMC manufacturing vehicle too at the same time. So GM, General Motors, has all of them. And it seems like the currencies are run by the Federal Reserve, and it's the same way. They keep them all in line. I guess if anything we can say about today's look at all the broad currencies, we can say for sure is that the Swiss seems to be one of the strongest at the moment, which is not abnormal. It's normal because we know that the Swiss has been a place to run to when you have doubts about economic issues in your country. In this case here, it's planet Earth, and when you have doubts about the dollar, I guess there's only one place to try to run to, and that would be the Swiss. Now, obviously, the Swiss doesn't have the volume that it can handle, but again, the Federal Reserve must give it its blessing on some level, accepting the fact that money is going to run there. And I don't know if they label it as manipulation or so forth. They do that. They come out. The U.S. Treasurer has a way of defining if you're manipulating your currency or if you're not. And when they tell us that China is not manipulating, and then when they do tell us China is manipulating, it's always a laugh. It's like, oh, surprise, surprise. And it's always, they give a list of, okay, this country is not manipulating, and that country is not manipulating, and this country is not manipulating. Oh, but that one is. And you got to wonder what they did to get on the wrong side of the, they don't tell you the rules. They don't really give you the rules very clearly about what is considered manipulation and what is not. They just say it's kind of like saying you're racist anytime someone has an opinion. And if other people who are listening don't like the idea of hearing your opinion, they just say you're just racist. It's just the same way. It's like, well, the U.S. Treasury has defined what you're doing to your currency as manipulation. It's like, oh, really? Oh, okay. And you going in and buying $120 billion of your own bonds every month, that's not manipulation, right? And the ECB, I think it buys about 60 billion of its own bonds every month. And that's not manipulation either. But somehow or another, I remember Tokyo, I guess about 6 months ago, they said, oh yes, they're manipulating the currency. And Bank of Japan said, oh, we're sorry about that, we'll fix that. And then the next report came out, nope, no manipulation anymore. What did they do? Anybody have a guess what they may have done to be on the wrong side of the U.S. Treasury? Did they not send the payment in that is owed? Who knows exactly what that's supposedly about. I mean, I understand that the Federal Reserve does lend money to other central banks, and then they charge them interest. So yes, the U.S. Federal Reserve will lend the exchequer money, and then they pay an interest for it. How kind of them compared to the rest of the world, where most of the European things, when they lend money, they have to pay interest to them. So I'm going to lend you money, Mr. Government. And by the way, I will pay interest to lend you that money. How kind of you. It is definitely a strange, like I said, I think it's very fascinating the fact that we've all lived to see this type of marketplace. It is weird. It is truly weird. I don't think weird is descriptive enough at this point in time. Like I said, I think I showed you the grants. Did I show you the grants? I didn't. Maybe I did not show you the grants. Let's see if I can show you that grants before we go out of here. I think that's well worth showing. Let's see, where is it at? Maybe it's in the cent. Yeah, it's probably in the cent. There it is right there. Let's see if we can show you that. So we can detach this thing. Let's see, how do we do this? No, cancel there. Maybe what we can do is go like this. Oh, I'm going to minimize this for a second. And bring this up like so. And then what I'm going to do is I'm going to move this over like so. And then I'm going to move it down so you can see it. Let's see if we can do that. And this is what I was talking about, which to me is totally oh, you can see it right there. Okay, there we are. And so that's what we're talking about here. Debtor's paradise. Oh, well. Let's see. There it is right there at the top of it. 10-year yield. Look at these yields. I mean, the diversity of what's going on is a blow your mind type of thing, you know. The relentless and recent rally in government bonds reached a new crescendo yesterday. And there was a peak as the 10-year Treasury slipped to 115. The inflation remaining on the I like that. With inflation remaining on the boil, you know, in other words, like you're cooking it on a stove, that price represents a historic anomaly. The real 10-year yield, as measured by the nominal one less headline CPI, reached minus 424 basis of the afternoon. For context, Treasury investors have received average post-inflation compensation of positive 98 basis points over the past 20 years, while the CPI adjusted yield only briefly dipped a minus 200 basis points. Now, this is all during the financial crisis of 2008. I know a lot of you have no idea there's a financial crisis out there, and we haven't bounced back. And it talks about the German boom the same way. You know, it's all the same story. It's fascinating, if nothing else, to live in these times. All right, traders, we're out of here. We're getting ready to do some trading. So this is Doc from North America, from Cattle Country, saying happy trails. Happy trails to you until we meet again. That'll be happy to hump day. Happy trails to you, to all our trading friends from Dukascopy and the planet Earth. Ta-ta.